It's June of 2025, and the Canadian market has been absolutely killing it this year. We've had our ups and downs, but as we go into the second half of 2025, I think there are a couple key industries and a couple key players that Canadian investors need to have in their portfolio in order to beat the market this year. Welcome to Golden Arch Investing. My name is Liam. Today we're going to be talking about 5 stocks that I own and I think that most Canadian investors should have in their portfolios for the second half of 2025. These are all great opportunities with different timeframes, different specific elements that make them great. And each of them has their own special sort of characteristics, let's say, that make them a great buy right now, that make them a great buy through the rest of 2025. And that means that you, as a Canadian investor, should at least look at them and consider if they have a place in your portfolio. We're going to start with one of my favorite industries that I talk about a lot on this channel. We're talking about Canadian oil and gas, and the stock I think you should own in this space, you can see it on the screen, CNQ, Canadian Natural Resources. Now, why do I think you should own them? Even when there are others that are probably a better value pick right now, others that have more room to grow. Well, CNQ is the scale player here in Canada, and they are the most direct beneficiary of the current trend towards more mergers and acquisitions, as well as the current trend towards more egress for Canadian oil. We've seen stories going on about new pipelines being built in this country. We've seen stories going on about all these different smaller players getting bought up. We've seen much more money flowing into this industry, much more attention. Canadian resources are hot right now. It is absolutely a space that private money is flowing into. Public money will follow. Canadian Natural Resources, being such a large player, have the opportunity to not only be a player, but also be a buyer, to be there on the front lines, buying up shares. When you look at the 1-year performance that I have on the screen here, you see they've just about closed the gap on the decline we saw from the tariffs, from the economic uncertainty, from the OPEC plus raises. And of course, there's been some recent events that have changed that. And you know, those recent events can be very unstable, very volatile. But being the scale player, these guys are much more likely to be stable. But that's not even the main reason you should own them. You should own them because they are, if not the very best, one of the very best Canadian dividend stocks out there. And right now, investors need more Canadian dividend stocks. With all of the international uncertainties, with the major changes in US tax law coming in this new big, beautiful bill, Canadian investors who depend on dividends need to start looking for dividends closer to home. Canadian Natural is one of the best dividend payers in the entire country. They have one of the best track records. They are able to just print cash. They absolutely generate great cash flow, well-run company. They are incredible to their shareholders. And so I really think if you own a Canadian energy stock, should probably be the name. Now, again, there are lots of others that you can consider in the space. But with the opportunities coming in the Canadian energy space, with the dividend outperformance, Canadian Natural is a pretty obvious pick for me. It's why I own it. It's why it's such a big part of my portfolio. And that's why I think it is the first of these 5 stocks that you should consider. Next on the list today, BN Brookfield Corp. Now, Brookfield is a very weirdly structured company, and it is very famous. We've talked about it recently. Bill Ackman, one of the most famous investors on earth, has been buying a huge chunk of this. He's made it almost 20% of his portfolio. And of course, I, a much less famous investor, have also been buying it. Now, you shouldn't buy something just because others are, but when a big name like Bill Ackman steps into a space like the Canadian markets, it's worth paying attention to. Brookfield Corp, BN, is the parent of all of the various Brookfields that are out there. You might see Brookfield Asset Management, Brookfield Energy Partners, Infrastructure Partners. BN owns a share of all of those businesses, and I think it's probably the best way to get exposure to that conglomerate. Of course, if you don't know Brookfield, it is this giant multinational asset manager. It is Canadian, and it owns lots of assets all over the world. I think its most famous element right now is that its former chairman is now the Prime Minister of Canada. And while that can't possibly hurt the company, it definitely has sort of shifted people's attitudes towards this. Now, one of the best things going for Brookfield, they are a massive infrastructure payer, a massive lender that likes to be in there when there's big investments going on. And right now, governments in both the United States and Canada and Europe have been pouring billions, if not trillions of dollars collectively into new infrastructure projects and new economic development, specifically talking about industry. Now, of course, the biggest industry that's getting a huge amount of money right now, particularly in Europe, but also we got about $9 billion going towards it in Canada. The United States has been investing in it to the tune of trillions of dollars for my entire lifetime, is the military industry. But there's all sorts of infrastructure going on. We've seen the talks about Canada's major nation building projects coming from Mark Carney, former chairman of Brookfield. And these guys are perfectly positioned to be a big player at that stage. To be, hey, we can, put our money beside the government's here. We can put our strength behind this player there. They're just really well integrated into that space. You've seen news stories come out talking about their interest in major infrastructure projects. They've talked about being interested in investing in industrial investment down in the United States. So helping build factories, helping that sort of trend towards US manufacturing grow. They've been there. They want to be a big player in that space. Now, that's not even the main reason you should own Brookfield. The reason you should own Brookfield is because they are one of the very best on a total return basis over the last 10, 20 years. They just simply return value to shareholders on a level that very few other Canadian stocks do. Now, when you can get that kind of outperformance over the longer term, you can see incredible returns. On the screen right here, I'm showing you the last 1 year where you see a 40% gain. And that is absolutely nothing to see. That 40% in a year is doubling the very hot stock market over the last year. If you zoom out to the last 10 years, you see 141%. When you zoom out to the max, they're up 3,632%, showing just what patience could do for you. If you bought into this thing at $7 following the great financial crisis, you could have 10x your money. And of course, we've seen moments where they've gone up and then they've dipped and they've gone up, and it will follow natural economic macro cycles. So, when we came out of that 2020, debt fueled enthusiasm in the market, obviously Brookfield suffered. But if you can buy and hold over the long term, the compounded annual returns of this company might outperform everything else in your portfolio. And because they are a diversified giant, there is very little concentration risk with this stock. If you're buying into something Canadian that has access to the world markets, that has access to all these different businesses, that is definitely exposed to various growth vectors, you should probably take that option. Gives you some diversification, gives you some great outperformance in the longer term. Third on the list today, what I believe is the best Canadian gold mine. It is Agnico Eagle Mines, ticker symbol AEM. Now, these guys have absolutely killed it over the last year. You thought Brookfield's returns are great. They're getting crushed by Agnico. 94%. You see just the absolute run up. It's been just about consistent. Very minimal dip due to the Trump tariffs. You see that was about, $10 a share, and it was almost immediately reclaimed in May. And they're nearing a top, if not at their peak right this moment. The thing is, while gold prices ran up and you might expect them to decline, instability around the world fuels gold. And Agnico has not run as fast as the gold price. If you continue to see strength in gold, and I don't even mean continued growth, I mean if we just chill, if we see gold stagnate at these levels, over the next year, Agnico Eagle stock will continue to rise because the amount of cash flow they've generated is insane. And the amount of cash flow they can generate at $3,000 gold is world class. These guys are genuinely a once in a lifetime type opportunity. If you had bought in 6, 9, 12 months ago, yeah, you would have made a lot more money, sure. But the next best time is now. Because again, gold is just fueled by uncertainty and instability. And there's been nothing bigger in 2025 than uncertainty and instability. It's the biggest trend of the year. Investors know it. I mean, you've looked at things like the VIX just constantly spiking. You've looked at the rise of international conflicts. You've looked at the question marks about things that were as fundamental, as foundational to the US economy as the dollar itself being a reserve currency. All of these things are up in the air right now. And while sure, there could be some sort of certainty reintroduced into the market in the second half of the year, I believe that these guys are just going to continue to see massive amounts of outperformance on their quarterly earnings thanks to the price of gold being up so high, and that there's room for them to run. I also think that with the massive push in Canada towards our resource industry, these guys could be a direct beneficiary of those projects. We see some infrastructure built. We see some, efficiencies built for them. We see some expansion opportunities built for them. And now you're talking about both a growth story and a profit story, which is something you don't see very often. And while it might be trading pretty rich, it's certainly not as rich as gold is right now. Again, huge opportunity, multiple growth vectors, multiple profit vectors. They are just building off the uncertainty around the world right now. It's a great hedge in your portfolio. If you own a bunch of the other things we're going to talk about today where you might be exposed to international markets, to macro events, well, Agnico Eagle isn't. They're exposed to the price of gold, which is currently trending a little bit inverse to the US dollar. So great diversification on top of all the other benefits. I think if you're looking at a Canadian gold mining stock, you need to look at this one. Next up, we're going to talk about Canadian natural gas. We're talking about ARC Resources. I've talked about these guys quite a few times on the channel recently because I think they're one of the best opportunities. Now, you could probably plug and play people like Peyto and Tourmaline in this conversation, but I think ARC gives some of the best asymmetric return possibilities over this year, which means they are protected a little bit from the downsides of some sort of botched LNG Canada rollout, presumably sometime this month. Now, we haven't seen news stories saying, hey, this is exactly what's happening at LNG Canada. We haven't seen anything big coming out of these companies. We haven't seen any big movement yet. But with that project coming online and with the massive disruptions to the worldwide LNG markets going on right now, these guys stand to benefit more than just about any company on earth. Canadian LNG is going to get a very, very well-deserved premium in the not-so-distant future because it is one of the safest supplies of clean Canadian, well-produced natural gas on earth. It simply is. Think about all of the other places that natural gas is being extracted from. Yes, there are lots of other natural gas producers like the United States that offer very similar returns. But when you consider some of the other players in the space and how they have been sort of rocked by geopolitical instability, by literal conflict, by attacks on oil fields and all of the other news stories we've seen over the weekend and just throughout the last little while, it's becoming more and more clear to big players, particularly in the Asian markets, that they need Canadian energy. This is going to be a massive boon, not only in the short term, but in the long term. Think about the kinds of conversations that are going on at the G7 about the need for stable, secure sources of energy for these massive East Asian and Pacific markets in general. They can't rely on fuel coming out of the Persian Gulf. They can't rely on fuel coming through the Red Sea. So where do they need to look to? Well, Canada is a great option, and ARC is up there. It's probably one of the best opportunities to buy Canadian natural gas. On top of that, their secondary business of condensates is a great floor being placed under this business, meaning that the downside is massively protected. This gives you one of the very few asymmetric return profiles in the Canadian energy space, meaning downside protection is very safe, very stable. They depend not on the crude oil price for the condensates, but actually on the production levels of their oil sands peers, which are typically very slow moving. They're very slow to adjust production, which means it's very unlikely they're going to suddenly need less of this stuff. On top of that, again, LNG looks great right now. It looks like a place you want to be in as long as you're not trying to ship it out of the Persian Gulf. And so with that being said, I think ARC is a great asymmetric return. I think you might see a massive pop in the next couple of days. And in which case, you see 20, 30, 40, 50% in a few days, maybe you take that, right? That's your lottery ticket. And you won some money and maybe you look somewhere else. But if not, then I expect them to see 30, 40, 50% gains throughout the rest of the year and probably repeating that through 2026. I am not kidding. I think these guys could be a double up in the next year, again, with a really strong base here of their condensates business, providing great free cash flow. They can become a profit story as well if the growth story of LNG doesn't play out the way it looks like it should. Overall, I love these guys. And I think if you're looking in this space, you want access to that Canadian LNG, you want to take advantage of the current state of the world right now, this is the place to be. Finally, how could I not talk about this stock? It's Shopify. These guys are a Canadian e-commerce giant, and they have been absolutely rocked by the economic stories this year, by the macro events going on. I mean, think about who suffers from tariffs? E-commerce. Who suffers from instability? E-commerce. Who suffers from, shipping rates going up? E-commerce. Who suffers from declines in Asian productivity levels or massive, challenges to the geopolitical order? Again, e-commerce. Shopify is exposed to all these things, sure. But their actual business model is really very robust thanks to their diversified base. They aren't the store. They're simply the provider of stores to others. And while their partners, let's say, or the businesses that are using their platform might be impacted by the global events, Shopify should be able to come right out the other side. On top of that, they've not only been a growth story in 2025, but a profit story. You look at their 1-year stock performance, we're looking at 62%. When you zoom out to the 5-year, however, you can see that there have been some serious peaks. Looking again, that debt-fueled 2021 period. Of course, e-commerce, such a huge story throughout 2021 with everybody locked in their homes. And then huge troughs with the drop down to the 30s range for the whole year 22 and this slow trend upwards. If we hadn't seen major tariffs, I would expect this thing to have made new all-time highs this year. Seriously, I think we would have beat through that 150, through that maybe even 200 range and seen new all-time highs, because the big story with these guys is their ability to drive profits. And that story has been challenged massively. But I think that's just given us an opportunity to buy in. Do I think these guys are necessarily going to double up this year? No. But I think that over the next couple of years, you should see at least a double in this stock. I think that you could see even more than that. I think the diversified base of their business, and on top of that, just the style they've been going towards, where they're building almost an ecosystem of businesses, and they're leaning into these businesses that are really sort of, these are local brands, smaller brands, places that the current geopolitical trends are pushing consumers towards. You think about in the United States, it's a buy American trend. In Canada, of course, we have the buy Canadian trend. We got our elbows up, right? Like all of these different trends in consumer spending are likely to benefit Shopify. And if you see the economy recover, which I believe it should over the second half of 2025, and of course, it's going to be unstable and it's not going to be certain. And there's all sorts of geopolitical stuff going on right now that could totally change that. But if you see the economy start to recover, you should see this stock start to fly. If you don't, well, now you have an extra 6 months to buy one of the best companies in Canada, one of the biggest growth opportunities. And of course, how many big Canadian tech names are you really going to get in your portfolio? One or two at the very most. So picking up this one, the big brand name shop, I think it makes a lot of sense for us as Canadian investors, and it rounds out this portfolio of 5 stocks really, really well. That's about all I have for those 5 stocks. I want to talk just briefly about some of my thoughts about the Canadian economy through the second half of the year. I think there's been a lot of fear placed on investors about the consumer, about the tariffs, about how it's going to just destroy everything, how everybody's in debt. I've talked actually a little bit about some of those risks. We talked about the big, beautiful bill potentially really damaging Canadian investors, particularly I talked about the big banks. There's also the story of the condo crash in Toronto and Vancouver that's hurt a lot of Canadian real estate investors. But across the board, Canadian investors have been hit by absolute uncertainty in 2025. I think the second half of the year is going to be decisive, and we're going to see it go one of two ways. The Canadian stock market and economy have been pretty divided over the last little while, with a lot of Canadian revenues, Canadian stock revenues specifically, coming from outside of the country. We're not as tied to our stock market sort of economically as the US is. You'd expect to see good economic data for the US directly impact the S&P. But the TSX is not quite the same story. And so I think in the second half of 2025, you're going to see some storylines play out, which will either decide that the TSX is going up. We might even match 24 returns, like a 20% return year to date, which would be fantastic. Or we could see it start to pare downwards, where we see, the big, beautiful bill goes through, really negatively impacts the financials. Maybe the oil price continues to drop, impacts the energy stocks, and we see a real drop. If the stock market drops here in Canada, I think it's a huge buy opportunity. I think there's a lot of big macro events pushing money into this country, which I think has kept the stock market up so far in the year. And I think that the opportunity to buy is now. If you haven't been buying over the last little while, Canadian stocks are genuinely undervalued in contrast to the US peers. We have some fantastic opportunities. Is it the same as the US market? No. Do we have the same, growth potential, worldwide growth potential as some of these US stocks have just flown to the moon? No, maybe not. But we do have fantastic opportunities here at home. There are huge incentives for Canadian investors to buy into these stocks, and there's a huge amount of money flowing this way. So I think whatever happens, this year is a great year to buy Canadian stocks. And if you don't like the 5 stocks I've picked here, you like something else, you have different stocks in different sectors that you'd rather be buying, let me know in the comments down below. Always willing to hear it out, and looking for new stocks to research and talk about here on the channel. As always, if you like the video, please like it. If you like the channel, please do subscribe. And I hope I'll see you in the next video.